Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, November 9th, 2011 is sponsored by Realtik. Alright guys, let's get into the mix today. We have a huge down day on Wall Street. Dow down 355 points, NASDAQ down 96 points, and the S&P 500 down 43. That's well over 3% across the board. Markets, you can see, have just rolled over the last 45 minutes or so, making new lows of the day. You're getting a small bounce around the Master 123 SPY pivot point right here, right now. Now, the key is, are you making money today? Because we are here at InTheMoneyStocks.com. This morning, our short on oil triggered. The USO, let's take a look. It was based off the USO daily chart, and it was triggered right here on a pierce of the 200 moving average at $37.65. Today, just recently, take a look at the intraday chart of the USO, and you imagine taking this short with members here at ITMS in themoneystocks.com right here, guys. This is the area. It was short. It was perfectly nailed. This is another trade, another profit in the bank as we continue to nail 90% winners here, and these are big winners. This is in one day. You're almost up a buck on the USO short today. You could have bought the SCO going along that ETF, which is 2 times, bought the DTO. Doesn't matter. You can do it in a plethora of ways. Bottom line is a great rollover on oil. It made sense. The chart told us that using the In the Money Stocks master methodology. And again, profits galore in the bank here and continuing. We should see more downside in oil over the next few days, in my opinion. That 200 moving average, you should definitely get a nice continued move down for at least a couple days before any sort of bounce. A lot of people were too scared because of the Iranian situation, because it looks like the world is all coming together because they're bailing out Greece. But bottom line is, last night, the markets got smoked going into today because Italy's bonds, the 10-year, went above 7%, and that freaked out the world because essentially it's the borrowing costs of these already super indebted nations. And how does a nation get out of debt when they're, where they're paying interest on debt that they're borrowing here, or money they're borrowing, which is like 7, 8, 9, 10%. They're never going to get out of it. It's a slow death by a million cuts, and it will ultimately speed up the higher those bond yields go. So the market's again crashing down today. Dow continues to be down 355 points on the day, right around the Master 123.50 level. And again, as long as you're short the USO or short the market in some aspect, and in fact, last night, if you were part of the Research Center, and I just want to say something before I go into this next key tidbit of information. The Research Center, the Intraday Stock Chat, 2 services here at InTheMoneyStocks.com. We offer a 7-day free trial, no obligation. You cancel before the end, you're not charged. That's simple. All right, and again, just coming in to the Research Center 7-day free trial, for those of you that did this yesterday, you got the call yesterday in the video. I put out a video in the technical analysis video portion of the Research Center. I said, tomorrow is your master day. That is the key day. And sure enough, look at the markets today. Crashing down. All right, so again, the calls are there. The plays are there. You can utilize them and profit by them. All right, so in any case, markets gapping lower on the back of that yield in Italy going up. And again, Greece, okay, whatever. Now Italy, but Italy's like 5, 6, 7 times the size of Greece. It's a major issue here. And the market was being blind to rally up as much as it has recently. You had to figure it was going to pull back, and sure enough, it is. And again, the same thing with the global demand for oil. There's no way we're out of this mess when you still have to go through Italy, Portugal, Spain, Ireland. France eventually will have its reckoning day, and guess what? So will the United States. It's not, oil demand is not going to skyrocket that much more over the next multiple months period. In fact, I believe it'll come back to $75 a barrel within the first quarter of 2012, 75 or lower even. All right. Now, in any case, you can see here we sold off initially because we gapped below the 200 moving average. Let's talk some technicals right now on the charts. Gap below the 200 moving average, that's a pretty good indicator. It's a river theory. River theory is a proprietary technique developed here at InTheMoneyStocks.com, just like many other things like confirmation signal and so forth. You want to learn this stuff that even institutions don't know, you take the 7-day free trial and check it out. All right, either way, river theory tells you you're going to go down, you sell off. Where do you go? Right here. Why is that a key level, guys? Let's zoom out. Well, obviously, it's a pivot low from Monday. Going to be support, right? So again, you can look to buy that level. Sure enough, Look at the market. It races higher. Goes right to the 200 moving average, right to the 20 as the 20 is curling down. That's resistance. Market starts to roll over. Bear flags it. This is a down move, sideways consolidation in spirit of bear flag, telling you there's more downside to go. And you never confirm, which is the confirmation signal, proprietary technique, above the 20 moving average. Plus the 200's right there anyways. Market collapses. We go through the double bottom right here, which makes sense because you already hit the double bottom here. This is the third hit or the second hit. The first hit's the only one you take based on In the Money Stocks methodology. You live and breathe the methodology here at In the Money Stocks, folks. You become an amazing trader that can rival any institution in terms of success rate. All right, maybe you don't have a billion or $1 trillion behind you like Goldman Sachs. But in terms of success rate, building your fortune for retirement, building your fortune to live life, the good life, in a tough environment where there's not a lot of jobs, the methodology takes you through almost every single time. All right, in any case, market rolls over. We go through the lows. We go right to the 123.50 level. Small bounce there. We're actually looking like it wants to trade lower here, folks. This could go much, much lower, so be aware of that. The next spot of support, guess where I'm going to be scalping this market? Right here. This pivot low right here, I'm going to give you a level right now. The level on the chart is 122.80 to 122.90. So a pierce essentially of 123. We pierce that 123 level, go to 122.80 to 90. That's your scalp trade to the long side. If you get through that, then you're going down to the 122 even number. Those are your next two levels to watch for scalps. Now, again, I focus on scalps here in terms of day trading because, frankly, if you want the swing trade calls, you want the major support levels for where we're going to go long and short the market, you got to join the Research Center. Take the 7-day free trial. And you can even take the 7-day free trial for the chat room. Even if you can't come in that often, you pop in, you ask us questions, you see my charts live, you hear my calls live, you know, I can discuss swing trades, day trades, you name it, it's all covered there. Market's selling good, guys. Good sell-off here. We are seeing some more moves down here, close to the lows of the day. Let's see if we take this out and go to the next scalping level. All right, let's look at the daily chart. We'll briefly look at the daily chart. One thing I just want to note here, you had a sharp move down, which, by the way, we caught on the short side early last week. All right, that was a good profit. Then we let the market float up here. We reshorted using the USO today, and the market's collapsing down. This is an in spirit of pattern into the 200, into the same levels again. That's a great level. Look at the market now, just hitting the lows of the day, collapsing. Okay, and again, at this point, I do think we have a chance of going all the way down to the 50 moving average, based on the fact that we already hit the 20. We're piercing it on this current candle, but ultimately we hit the 20 already. That means the 20 this time is not going to be significant. Remember what I talked about in terms of the 10-minute chart, how this was your pivot, and then this was your double bottom. This is your next hit. It's only the first hit of a double bottom that you're taking there. This one rolls through. Same thing applies on the 20 moving average daily chart. Here was your first hit. This is your second hit. You don't take your second hit. It's not a high enough percentage trade. You know, if you're not taking, and by the way, folks, we're coming right down to the level here. We're not quite there yet. Well, there we go. 122.86 low right here. So we'll watch and see how this plays out. But either way, folks, it's all about understanding the odds and the risk reward based on using the methodology. You can have those odds at a huge amount. Great bounce here already. Back to 123. There you go. So you're seeing this live, folks. You're seeing this live already. A 15-cent bounce off the lows for a scalp play. The traders in the chat room and on Traders Life 24/7 playing this, that is a beautiful little scalp bounce for 15 cents easy. I bet it goes even higher, probably get about 20 to 25, but you take off half there and you put a break-even stop. That's how you roll here at In the Money Stocks because it's all about money management and discipline as well. So half off for 15 cents, and we'll let the rest run for a total of 30 to 35 cents on the second half. Already 23.10. Here we go. Let's do it. Very, very nice, guys. That's 25 cents. So 25 cents. And again, you caught me here with a live trade as we continue to trade this. Try doing a video and trading at the same time. Now that's talent. All right, again, we'll jump away. I'll keep my eyes on this on my other level too as we jump away. I just want to cover the oil trade again because this is key, guys. Again, if oil hits this level, I'm taking half off. Right around the 36.65 level. So we're only about 15 cents away from taking half off on that trade, which again was a live alert given out on the hot charts and alerts. I posted the trade about 3 days ago, Sunday night for this week, and sure enough, that's the beauty of it. It triggered this morning, and we're making quite a bit of money here, and that's what it's all about again. So either way, the SPY continues to be up about 25 cents from that pivot low, right around the 123.10 from 122.86 area. And again, we'll see if we can get a little bit more out on the second half. I have a break-even stop on the first half after taking 15 cents on a scalp. And ultimately, what you're doing here, folks, is you're playing minimally, even a small trader would play 1,000 shares there. A larger trader like myself is doing 5,000 shares of the SPY and somewhere in that range. Sometimes I'll even do more than that, but in this case, approximately 5,000 on a falling knife like this. All right, again, banked already the 15 cents with a break-even stop looking for 30 cents. Let's just jump back to that SPY again. Still trading at 123.10 for a beautiful bounce off that level. And you just see it before you, folks. I mean, it's the beauty of it right there. So again, right in this area, see how the little pivot low is right there, and it just tells you perfectly this little pivot low. 123.15, 17. All right. I'm out for 30 cents there. All right, I'm out for 30 cents. Very nice, guys. And it's even going a little bit higher now, 123.19. There you go. Very nice. All right, so I just pocketed some nice money, essentially a 22-cent profit, give or take a little bit right there on approximately 5,000 shares, and you move on. All right, that's what it's all about, guys. Good job. And again, I'm glad you guys got to see a live trade here as we continue to do this market. Gives you a sense of what we do. And by the way, the methodology here works perfectly on all time frames. So if you're a swing trader and you're at work and you can't be watching the market 24/7, you apply the same methodology we teach to your swing trades, and we'll give you the swing trades just like the USO. Imagine having that USO today when you shorted it around 10 o'clock, 10:30 this morning, and then riding it down and already being in the profits as much as we are. And look at this bounce on the spiders, guys. What a beautiful bounce. Looks like more traders are taking it off the table here and just pocketing the profit. We're now back to 123.26. That's a 40-cent profit from the low of the day. And even going 123.29. So you can see, again, if you know the levels, whether it's a daily chart or an intraday chart, you can make money. That simple. All right, I got to get back to trading in the chat room, guys. I encourage you to come join the Research Center and the Intraday Stock Chat 7-day free trial. It's there. The money is there to be made. Using the methodology, it's very simple. Just learn the methodology. We'll teach it to you. This is proprietary stuff even institutions don't know. You come to us. We'll make sure we turn your career in trading around, swing trading, investing, whatever it may be. You start profiting with the pros. Take care.